Namaste, welcome all of you. This is our 12th lecture in the series of online lectures. See, you will be able to understand my lectures only if you have seen my earlier lectures, especially only if you have seen my earlier lecture number 11, then it would be easy for you to understand these lectures. This is just suggested for your better understanding. Let's start the day with the interesting thing. In my last lecture, I had asked one quiz. The quiz was that if new RDD percentage RDD is asked to be calculated in the problem, new percentage RDD is asked, then how it is calculated? The options given were, is it added the percentage added to sundry debtors? The percentage RDD is deducted from the sundry debtors? The percentage RDD is added to sundry debtors after doing all adjustments? Or the percentage RDD is deducted from sundry debtors after doing all adjustments. Now let's see who has given the correct answer. See, that Shawnee has given the correct answer. The answer is D. Very good, Shawnee. Shawnee has given the correct answer. Very good, Shawnee. So Shawnee is the winner of this quiz. Congratulations, Shawnee. We are learning bookkeeping and accountancy standard 12. We are learning lesson number 1, that is introduction to partnership and partnership final accounts. We have covered all these competency statements and we have covered all the statements and we are learning how to find out the last point, that is how to find the financial results of the business. See, we had learned two methods of maintaining capital accounts for the partners, that is fixed capital method or fluctuating capital method. See, in the last two examples which we have learned, we hadn't used this method. But in one of the examples in this lecture, we are going to use this method. Whether to maintain the capital account of the partner either by fixed capital method or fluctuating capital method. Okay, if you are going to maintain it by the fixed capital method, then you have to maintain two accounts, that is capital account and current account. But if you are maintaining in a single comprehensive account, then you can maintain it in the capital account itself using fluctuating capital method. What we learned in our last lecture, we learned partnership final accounts, illustration number 2. That was of Shilpa and Katrina, which was given from page number 27 to 29. See, I had given the illustration to solve, and this correct illustration has been solved by Shawnee Penkar. Very good, Shawnee. Shawnee, you are the very studious person, studious student. You are very brilliant and clever student. Very good, Shawnee. See, this is the balance sheet, trading and profit accounts, and the other earlier was the balance sheet. Very good, Shawnee. What we will learn in today's lecture? We are learning partnership final accounts illustration number 3, which is given from page number 29 to 31. That is of Rucha and Julie. And one more thing we will learn in this today's lecture, that is illustration number 4. That is given on page number 32 to 34. That is of Mr. Piyush and Arun. Okay, so in this lecture we are going to learn two illustrations, that is illustration number 3 and illustration number 4. Okay, and illustration number 4. See, these were the important adjustments regarding bad debts, RDD, and discount and reserve for discount on debtors and creditors. See, I always show you this table because these are the very important adjustments which must be remembered forever. Okay, these are the important adjustments. Then another important adjustments regarding bills receivable, bills payable, bad debts, RDD, and discount and reserve for discount on debtors and creditors. Now let's move to today's problem. See, Rucha and Julie are partners sharing profits and losses in their capital ratio. How the profit and losses will be shared? In the proportion of the capital. From the following trial balance and adjustments, you are required to prepare the final accounts. and the trial balance has been given. Okay, which are the steps for solving the problem? Prepare the necessary accounts including working notes. Place some mark on trial balance items for external as well as internal adjustments. Which are the internal adjustments? Internal adjustments means the hidden adjustments, right? And external adjustments means the adjustments which are given below the problem. Okay. Go through the trial balance items and give one recording of effect sequentially. For the trial balance item, one recording effect and sequentially it should be given so that you should not forget or you should not miss it. Okay. Go through the adjustments and give two effect for the adjustments. Then close ledgers in the working notes except capital. Except capital account, close all the ledgers. All the ledgers means all the books, profit and loss account and trading account. Find gross profit, net profit and transfer it to individual capital accounts. Find the closing balance in capitals and transfer it to balance sheet. Then tally the balance sheet. See, these are the steps for solving the problem. Now, this is illustration number 3. Okay. Now, you were supposed to draw one more column, one more ruling for posting. Okay. And I will tell you how to mark for the posting. Let's start. I hope you are doing with me. You are marking along with me. Purchases, trading account debit side. Trade expenses, trading account debit side. See, why trade expenses, trading account debit side? See, in one of the rules which we had seen earlier, if trade expenses are given along with any of the expenses like general expenses, miscellaneous expenses, like that. If any of the other expenses are given in the same trial balance, then trade expenses will go to trading account. If none of these kinds of general expenses, miscellaneous expenses, sundry expenses are given, then trade expenses will be recorded to profit and loss account. Okay, remember this forever. So here trade expenses are given along with the general expenses. So trade expenses will be recorded to trading account, debit side. Salaries, profit and loss account, debit side. Wages and salaries. See, here wages word is given first, so obviously it will go to trading account, debit side. Advertisement in the bracket is given 2 years, so it is a hidden adjustment or internal adjustment. Okay, internal adjustment. So make one mark against it immediately. Advertisement will be recorded at profit and loss account, debit side. Sales return will be deducted from sales, so minus S. Freehold property, asset. Office rent, profit and loss account, debit side. Motor van, asset. Stock given on 1st April 2018. See, the closing date is 31st March 2019. So it is an opening stock, right? So opening stock will go to trading account, credit side. Trading account. See, 1st April 2018. So trading account, debit side. Trading account, debit side. Then general expenses, profit and loss account, debit side. Sundry debtors, asset. Coal, gas, fuel are used in factories. Okay, for which purposes those are used? For example, for burner, furnace, etc. For burning the furnace. Okay, so coal, gas, fuel is used for these purposes. Trading account, debit side, in which are used in the factory. So those are the trade expenses for manufacturing purpose. Carriage inward, inward again, trading account, debit side. Carriage outward, profit and loss account, debit side. Plant and machinery, asset, capital account. Rucha, partners capital account, credit side, right? Here we are maintaining, here this in book, a separate partners capital account is shown. Okay, if the separate partners capital account is shown instead of including the capitals in the balance sheet, then you have to maintain, you have to record capital account in partners capital account, credit side. Jewelry partners capital account, credit side. Sundry creditors, liability, sales, trading account, credit side. Reserve for doubtful debts will go to the profit and loss account, debit side as per the formula. Bills payable, liability, purchase returns will be deducted from purchases. Then let's go to the adjustments. Closing stock is valued at rupees 88,000 cost price and rupees 90,000 market price. See, we have nothing to do with whatever is the market price or cost price. Okay, we have to just look at the value which is the lowest one, lower one. Which is the lower one? See, the lower value is rupees 88,000. So we should not look at the higher value. Okay, lower value is rupees 88,000. As per the principle of conservatism, okay, always the lowest value is considered for the closing stock. So which is the lowest value? 88,000. Okay, so this closing stock will be recorded to trading account, credit side and asset. Then Rucha and Julie withdrawn from business rupees 3,000 and rupees 2,000 respectively for their personal use. Okay, so this is a very important adjustment. Now listen to the clarification given by me. See, Rucha and Julie withdrawn from the business rupees 3,000 and rupees 2,000. See, it is not clearly mentioned over here in which kind they have withdrawn. Whether they have withdrawn in kind of money or whether they have withdrawn in kinds of goods. Okay, now let's see if they would have withdrawn in kind of money. Withdrawn rupees 3,000 2,000. If they would have withdrawn in kinds of money, then there should be an account like cash in hand or cash at bank. Let's check whether is there any account like cash in hand or cash at bank. No, there is no any account of cash in hand or cash at bank. Means this rupees, this amount, this value is not withdrawn from cash in hand or cash at bank because that account is not here. Cash in hand, neither cash in hand nor cash at bank account is there in this trial balance. It means it is clear that they haven't withdrawn from these accounts. Okay, then from here they have withdrawn. They haven't withdrawn from these accounts. Then from here they have withdrawn this rupees 3,000 and 2,000. It means they have withdrawn in kinds of goods, right? See, this is again a hidden adjustment, right? They have withdrawn. You should understand. For that you have to look at the if these accounts are there. Okay, here these accounts are not there. It means they have withdrawn in terms of goods. Okay, so if they have withdrawn in terms of goods, then their withdrawal should be recorded at trading account credit side. Understood? This is the biggest and most important explanation for this adjustment. The goods withdrawal should be recorded to the trading account credit side, and similarly the drawings should be recorded at the partners capital account debit side. Partners capital account debit side. Then third adjustment, depreciate motor gun by 5% and plant and machinery by 7%. Depreciation profit and loss account debit side, and that much depreciation value should be deducted from asset. Then reserve for doubtful debts on debtors at 5% is created. Reserve for doubtful debts RDD, that is that value. This is new RDD because this is given in the adjustment. So new RDD should be added to the profit and loss account debit side as per formula and should be deducted from the debtors at asset side. Outstanding wages are rupees 800 should be outstanding wages. See, should be added to the trading account credit side to the wages, right? And should be recorded to the liability because those are outstanding. Then this is again a very important adjustment and most important adjustment. See, this adjustment number 2 has assumption. Similarly, this adjustment number 6 has a very big assumption. Now listen properly. Which assumption is it? See, goods of rupees 6,000 were purchased on credit, but no entry was found in the books of accounts. No entry was found in the books of accounts. See, if the goods of rupees 6,000 were purchased on credit, means obviously that much of amount of goods purchased should be added to the purchases to the trading account debit side, right? Purchases should be added to the trading account debit side. Then, similarly, as we purchased on credit, so creditors got generated, right? But we had forgotten to enter in the books of accounts. Though we had forgotten, but the creditors were generated. They would have remembered it, right? So we have to record that much of amount to the creditors also. Okay, this is easy. This you must have understood up to this, right? If goods purchase of specific amount on credit were not recorded, then you know what should be done with this. You have to add that much of amount of goods to the purchases at the trading account debit side, and that much of amount of creditor should be generated. But what is special in this entry, in this adjustment? See, in this adjustment, see, closing stock was valued, right? If the goods were purchased, means goods of rupees 6,000 were not there, right? While at the time of making the trial balance. But closing stock has been valued, means the work of valuation of the closing stock has been finished. Listen properly. Work of valuation of the closing stock has been finished, and that was found to be rupees 88,000. It means the goods which were purchased on credit were not found in the closing stock. The goods which were purchased on the credit were not found in the closing stock also. Then where the goods has been gone, where the goods has been vanished, it means that much of amount of goods were also sold. If those goods were not found, means those goods were sold, and whatever we had sold, that also we had forgotten. Whatever we had sold, that also we had forgotten. Okay, means entry was not found in the books of account. Similarly, we forgot to record purchase. Similarly, we forgot to record the sales. Okay, how we came to know? Because closing stock is valued, and there is no any adjustment like this, like forgotten. They have forgotten to record the closing stock. There is no any such adjustment. Means we can assume that they have forgotten to record the stock, record the goods which were purchased on credit. It means those has also been sold on credit. That much of goods were also sold on credit. If the goods were sold on credit, then we have to record the goods, right? We have to record the goods. So that much of amount of goods should be added to the sales in the trading account credit side. Okay, sales trading account credit side, and those goods were sold on credit, so we have to add those much of debtors to the asset side. Okay, because we had forgotten, but the person, the party, customer to whom we have sold on credit may have remembered it, right? So tomorrow he may come to pay us the money, so we have to record those much of amount of goods which we have sold on credit, but we haven't made the entry. We have to record it to the debtors also, right? And we have to record to the sales at the trading account credit side. Okay. Now let's see how to solve it. Okay. You were supposed to make draw ruling for in the books of Ruchi and Julie trading and profit and loss account for the year ended 31st March 2019. Trading account, two columns from amount to the debit side, two columns for the amount in the credit side. Okay. Then make a marking for trading account. Then below that start the profit and loss account, right? Below that start partners capital account, and below that balance sheet. Okay. First we have to create trading account, then profit and loss account. Here we are creating partners capital account also. Then we have to create balance sheet. Now let's start adjustments, right? The first adjustment, that is closing stock is valued at rupees 88,000 and 90,000. We have learned. See, there is no any marking which should be done against trial balance. The lowest value of the closing stock, that is rupees 88,000, is recorded at the trading account credit side and asset. Then Rucha and Julie withdrawn rupees, the withdrawal, there will be no any marking made for the posting against trial balance, right? For their drawings. But for depreciation of the motor van and For plant and machinery, we have to make the marking against two markings against motorman and plant and machinery. Why two markings? One marking for depreciation, we have to deduct that much of depreciated value from the fixed asset, and we have to record that much of depreciation to the profit and loss account debit side. So for the two recordings, we have to record the two adjustments for adjustments given below the trial balance. So make two dots against motorman and two dots against plant and machinery, right? Then reserve for doubtful debts on debtors. See here, check whether the bad debts are given. See, bad debts are not given here, right? Bad debts are not given here. Then what should be done for these reserves or for these reserves? See, reserve for doubtful debts on debtors at 5%. It means these are the new reserves, right? New RDD. So new RDD should be recorded to the profit and loss account debit side as per the formula. And it should be added to the bad debts. But the bad debts are not given here in the trial balance. We can directly record the reserve, right? And the second adjustment, that is that much of amount 5% RDD should be deducted from the debtors. Okay. Then there should be mark against debtors, right? Where are the debtors? Sundry debtors, right? One mark. One mark for this RDD. See, this is the one mark for this RDD. Then outstanding wages rupees 800. So two marks against wages. One for recording in trading account debit side and one for recording at the liability side, right? For the outstanding wages, one for trading account credit debit side and here debit and one for liability. Then goods of rupees 6,000 were purchased on credit, but no entry was found in the books of account. I think this was not visible to you. It is clearly visible here, right? See, 6,000 were purchased on credit, so you have to add that much of amount to the purchases at the trading account debit side. Okay, so one mark against purchases trading account debit side. This one mark. Then one mark should be added. That much of amount should be added to the creditors at the liability. So against creditors, sundry creditors, liability, one mark. Then we have forgotten to record the sales also. Okay, so that much of amount should be added to the sales in the trading account credit side. So one mark against trading account credit side against sales. Then those much of amount of debtors were also generated. So we have to record those much of debtors also. Debtors are there in asset side of the balance sheet. So one mark against debtors. Okay, here for recording these forgotten sales. Okay, at the asset side of the balance sheet. Okay, now let's start to solve the problem sequentially, right? See, purchases. First is purchases. Trading account debit says 48,000. It is in, see, adjustment is there, so we have to record it in the inner column. Purchases rupees 48,000, right? Purchases trading account debit side rupees 48,000. Trade expenses 3,000. Trade expenses. There is no any adjustment, so it will go directly to the outer column. Trade expenses rupees 3,000. Salaries rupees 4,500. Profit and loss account. Is there any adjustment against salaries? No. 4,500. Right? Then wages and salaries. Trading account debit side rupees 2,800. There is one adjustment, right? Then advertisement for 2 years rupees 4,000. Advertisement will go to the profit and loss account debit side 4,000, right? See, there is an internal adjustment, hidden adjustment, and hidden adjustment must be solved immediately because specific adjustment, external adjustment is not given for the hidden adjustment. So we may end up in forgetting because we remember to solve the adjustments given below the trial balance, but we may forget the adjustments given inside the problem. That is the internal adjustment. So it is a good practice to solve the internal adjustments immediately. So to the internal adjustments against advertisement, the advertisement expenses are given rupees 4,000 for rupees 2 years. Means for 1 year it is rupees 4,000. So for 2 years it is, for the second year it is 2,000. So how much of advertisement expenses you have paid in advance of next year? That is rupees 2,000. See, 2,000 rupees we have paid in advance. Okay, that is prepaid advertisement. So we will deduct that much of prepaid advertisement from the advertisement. Okay, and this much amount of advertisement were only due for this year, right? Let's note the working note number 2. See, what is working note number 2? Advertisement expenses are paid for 2 years. So, expenses of 1 year are rupees. How much advertisement expenses you have paid? Rupees 4 year. Where rupees 4,000. Right? So, the expenses of 1 year were rupees 2,000. Right? Expenses of 1 year rupees 2,000 are prepaid. Prepaid expenses, that is advertisement, is treated as an asset. So the amount of prepaid should be deducted from the total amount of advertisement in profit and loss account. Which amount should be deducted? Prepaid. The amount of prepaid. Okay. The amount of prepaid. What should be done with it? It should be deducted. It should be deducted from the total amount of advertisement in the profit and loss account. Okay. Debit side. So we have deducted rupees 2,000 which were prepaid for the next year. Okay. And what should be done with this prepaid advertisement? This is an asset for the time being. For the time being means till the close next year is not closed. The books of accounts of the next year are not closed. This is an asset for us. So the asset should be recorded. It should be recorded as prepaid advertisement rupees 2,000. Okay, prepaid advertisement rupees 2,000. Next, sales return rupees 8,000. What should be done? Should be deducted from sales. Sales return rupees 8,000. Okay, then freehold property. It is an asset. How much of rupees? Rupees 23,000. Freehold property. Freehold property rupees 23,000. Right? Rupees 23,000. Office rent rupees 5,000. Office rent rupees 5,000. Then motor van. It is an asset of rupees 40,000. Motor van rupees 40,000. Right? Then stock. As the closing end of the is 31st March. Closing date is 31st March 2019. So the stock given on 1st April 2018 is obviously an opening stock. So where the opening stock should be recorded? Trading account debit side. Right? Trading account debit side rupees 89,500. Opening stock trading account debit side rupees 89,000. Opening stock rupees 89,500. Okay. Next. Then general expenses. Profit and loss account debit side rupees 2,500. General expenses rupees 2,500. Let's check the value once again. General expenses rupees 2,500. Okay. Then Sunday debtors rupees 62,000. Sunday debtors asset side. Current assets Sunday debtors rupees 62,000. We should always have the practice of leaving. See how much of lines you should leave for the adjustments, for bad debts, for the Sunday debtors. See, If there is one adjustment, leave 2 lines. If there are 2 adjustments, leave 4 lines. If there are 3 adjustments, leave 5 lines. Okay. Likewise, if there are 4 adjustments, leave 6 lines. Okay. Now, how many adjustments against sundry debtors are there? 2 adjustments. So it is a good practice to write 3 lines below the sundry debtors. Next, sundry debtors we have recorded 62,000. Then, coal, gas and fuel trading account debit side rupees 1,000. Coal, gas and fuel rupees 1,000. Okay. Then, carriage inward rupees 800. Carriage inward rupees 800. Then, carriage outward rupees 1,300. Carriage outward rupees 1,300. Then, plant and machinery asset rupees 13,800. Plant and machinery rupees 13,800, right? Plant and machinery rupees 13,800. Now let's move to the items given at the credit side. Capital account, Rucha and jewelry. See, here the different special partners capital account has been given in the book. Okay, so we will also make the partners capital account. See, it is actually we are learning partnership final accounts, right? So it is a good practice to always prepare the partners capital account separately. But in book it is not shown for earlier 2 problems, so we also hadn't solved like this. Likewise, but here for the problem number 3, a separate partners capital has been shown in the book, so we'll make a separate partners capital account. Okay, and rupees for Rucha partners capital account credit side, because it always has a credit balance, capital 80,000 and jewelry 40,000 respectively. So let's move to the partners capital account. By balance brought down, for Rucha it is 80,000 and for jewelry it is 40,000. Rucha it is 80,000 and for jewelry it is 40,000. Okay. Next, sundry creditors, liability rupees 22,000. Sundry creditors, that is current liabilities, rupees 22,000. Why? The inner column, because there is one adjustment. Okay, 22,000. Then sales trading account credit side rupees 1,48,000. Sales 1,48,000. Okay. Next, reserve for doubtful debts, that is old reserve for doubtful debts, which should be actually deducted from the bad debts. Okay, but bad debts are not given here, so we'll deduct it from whatever new RDD we calculate. Okay, so what is the old RDD? Profit and loss account debit side, as per formula it will go. It will old RDD is rupees 1,200. Okay, so profit and loss account debit side to old RDD 1,200, right? Old RDD rupees, we have to deduct old RDD rupees 1,200. Okay. Then bills payable to the liability side 12,000. Bills payable. Bills payable is current liability. Okay. Bills payable current liability rupees 12,000. Then purchases return, we have to deduct from the purchases rupees 6,000. Purchases return rupees 6,000. Okay, so whatever the items given in the trial balance, you have completed their posting. Now let's move to the adjustments given below the trial balance, that is the external adjustments. Clothing stock, what is the lowest value? 80,000. So first adjustment, first recording will be done to the 88,000. So closing stock rupees 88,000 to the trading account credit side. Its second recordings will come to the asset side, right? That is current asset. Closing stock rupees 88,000. Okay. So the two recordings you have done for the closing stock. Next, Rucha and Joely withdrawn rupees 3,000 and 2,000 respectively. Okay. So I had explained you, right? Because there is no cash in hand, cash at bank account there given there in the trial balance. It means they have withdrawn from the goods, right? So you have to record those much of goods to the trading account credit side. Okay, rupees 3,000 and rupees 2,000 for Rucha and Joely. Trading account credit side. Goods withdrawn by partners. Rucha 3,000 and Joely rupees 2,000, right? So the total withdrawal are rupees 5,000, 3,000 and 2,000. Where its second recording will be done, those will be recorded to the partner's capital account debit side. Why? Because we are maintaining separate partner's capital account. Okay, as we learned the pro forma and we solved some problems in first subtopic. So the drawings for Rucha are, see, the partner's capital account is created, particulars Rucha's amount, Julie's amount, credit side, particulars Rucha's amount, Julie's amount. So the drawings will come to the debit side. Okay, Rucha's drawings are rupees 3,000 and Julie's drawings are rupees 2,000. Right? Then this second adjustment we have completed. Depreciate motor van by 5% and plant and machinery by 7%. Motor van by 5%. Come to the asset side. Motor van by 5%. Okay. The value of the motor van was rupees 40,000. So the 5% of 40,000 is rupees 2,000. So the total written down value of motor van is rupees 38,000. And 7% of plant and machinery is rupees 966. Okay, so the written down value of plant and machinery is rupees 12,834. Okay, but we have to record these depreciations to the profit and loss account debit side. Motor van depreciation rupees 2,000 and plant and machinery depreciation rupees 966. Okay, so we record it. Depreciation. Motor van rupees 2,000 and plant and machinery rupees 966. Okay. Then two recordings for depreciation also we have done. Then reserve for doubtful debts on debtors at 5% is to be credited, right? Created, sorry. So 5% on debtors at the debt. So you have to deduct that much of amount. First, your first entry that you have to deduct that much of amount. So we'll come to know how much of amount it is, and that amount you have to add to the profit and loss account debit side formula. So always for this kinds of instruction adjustment, first you have to calculate from the debtors that RDD, and that amount of RDD you have to carry to the profit and loss account debit side, and you have to add to the bad debts. Okay, so reserve for doubtful debts on debtors rupees at 5% is to be created. But let's wait, okay, because we have to solve adjustment number 6 yet. Okay, let's wait, okay, for this adjustment. Next, we'll solve next adjustment. Outstanding wages rupees. See, never make the hurry. Why? I had already told you one rule for this kinds of adjustment. See, for solving the adjustments for sundry debtors, bad debts, for the sundry debtors, what is the specific rule? All the other adjustment must be solved. All the other adjustments must be solved on the sundry debtors. Then the adjustment for the new RDD, new provision should be done. Okay. As per this rule, which you have already learnt in my earlier lectures, what is the rule? All the other adjustments must be solved first. All the other adjustments of the sundry debtors must be solved first. So which is C. So before solving this, we should remember that one more adjustment is there of the sundry debtors, because this is reserved for calculation of the percentage already. See, in my last lecture, I had asked the same quiz. If the percentage already is to be calculated on debtors, then how it should be done? That much of amount should be deducted from the debtors after doing all the adjustment, right? That was option D. After doing all the adjustment of debtors, the percentage RDD should be, new RDD should be calculated, right? So we will solve this adjustment later on. So outstanding wages rupees 800. Outstanding wages, trading account, debit side. Wages, outstanding rupees, earlier wages were rupees 2800 and outstanding wages are rupees 800. Outstanding wages rupees 800. It is a current liability. So we'll add it to the liability side, current liability. Outstanding wages rupees 800. It will go to the outer column, 800. Okay. Two adjustments we have done. Then goods of rupees 6000 were purchased on credit, but no entry was found in the books of account. So 4 entries should be done, 4 recording should be done for this transaction, for this adjustment. 6000 purchase were on credit which we had forgotten. So we have to add that much of purchase to the trading account debit side first. Okay, trading account debit side, unrecorded purchases of rupees 6000, right? Unrecorded purchases of rupees 6000. So we have to add unrecorded purchases. So the total purchases would be rupees 54,000 and 6,000 were purchase return. So the total amount of purchases is rupees 48,000. See, okay, unrecorded purchases of rupees 6,000. So that much of those much of amount of creditors were generated. So we have to add to the sundry creditors in the balance sheet, current asset. Okay, sundry earlier sundry creditors given in the trial balance were rupees 22,000. So we have to add new creditors, add the creditors which we had forgotten to record. So how much of amount of new creditors are there? Rupees 6,000. Okay, so the total amount of creditors are rupees 28,000. Okay, the next important adjustment, hidden adjustment in this adjustment, that is hidden recording. See, as the closing stock was valued, the value of the closing stock was valued, it means those 6,000 were not recorded in the closing stock. So we have to record that much of amount in the closing stock at the credit side of trading account as sales, because those must have been sold on credit also, which were remained noting down, right? Which were not recorded at the in the books of account. So we have to add that much of amount of goods at the trading account credit side as sales. We have to assume this, right? Trading account credit side unrecorded sales rupees 6,000 against working note number 1. We'll read what is that working note number 1. Okay, and that much of sundry debtors were generated because we had sold on credit, right? So we have to record those much of sundry debtors also. Unrecorded sales rupees 6,000. Okay. Now, what was working note number 1? See, I had written working note number 1. As per adjustment number 6, it is given that there were unrecorded credit purchases of rupees 6,000 whose entry was not found in the books of account. So, we recorded them as unrecorded purchases in the purchases in the trading account debit side and added the same to the sundry debtors on the liability side of the balance sheet. Okay, this adjustment we had solved. But what is the remaining and important thing? As per adjustment number 2, withdrawals of Rucha and Julie are given, but its kind is not mentioned. As well as neither cash in hand nor cash at bank account is given in the trial balance. It means those withdrawals are not in kind of money. Apparently, withdrawals may be in the kind of goods. But at the same time, closing stock has been valued. So no any adjustment is found against it. See, there was no any adjustment found against closing stock, right? Consequently, it is supposed or assumed that it is supposed or assumed. What is assumed? It is assumed that whatever amount of goods which were purchased on credit and remained unrecorded, it seems that much of amounts of goods to be sold and remained unrecorded also. See, those were purchased on credit and remained were unrecorded. It seems that those were sold also and those remained unrecorded sales also. Unrecorded sales also. Right? So, unrecorded sales has been added to sales and also to the debtors. Okay? That's why we added that much of unrecorded sales to the sales and that much of debtors which were generated due to the credit sales. Why credit sales? Because as the no entry is found, it means those must be the credit sales. Okay? And that much of amount was neither there is a cash in hand account or cash at bank account. Okay? So those must be the credit sales. So credit sale, as the credit sales generated means debtors got generated. Okay, so we have to record that much amount to the debtors also. And withdrawal from partners are consumed to be in terms of goods. So whatever has drawn by Rucha and Julie must be in terms of goods. So drawings in terms of goods is recorded at credit side of trading account. Drawing credit side of trading account to record that much of amount of goods to stock. Okay. Now we solved adjustment number 6 also. Now let's move to the adjustment number 4. Because this new RDD or provision for doubtful debts new should be done after doing the other adjustments of the debtors. So it is we will solve the adjustment number 4 now. Reserve for doubtful debt on debtors at 5% is to be credited. On which value? Whatever value is remaining after doing all the adjustments, right? It should be deducted at 5%. So let's move to the sundry debtors which are there in the balance sheet asset side. Okay. This 6,000 value of 6,000 we record unrecorded sales we added and 68,000 was the value of the sundry debtors. We have to calculate 5% of RDD on this value. Okay. So we have to deduct 5%. What is the 5% of 68,000? It is 3,400. Why? 10% is 6,800. So half of 10% that is 5%. Right? So 6,800 divided by 2 or half 50% of it is 3,400. So what is the 5% of 68,000? It is 3,400. So this is the new RDD which we have to deduct from the debtors. So we will get the final debtors of rupees 64,600. Okay. So this new RDD we have to record to the profit and loss account debit side. Okay. New RDD, how much it was? Rupees 3,400. RDD at 5%, 3,400. RDD 3,400. Okay. So with this we have solved. We have added it and we deducted it. Okay. So with this we have solved all the adjustments. Now what is the important thing that we have to check that have we taken all the amounts of the outer side? Whether we haven't forgotten to take in any amount of the outer side, let's check. Opening stock you have taken, purchases, here sort all the adjustments and taken final purchases outside. Wages and salaries did the adjustment, taken outside. Did expenses, coal, gas, fuel, carriage inward, we have taken outside. Sales, after recording unrecorded sales, after doing entry of sales return, taken outside. Closing stock outside. Withdrawal drawings we have taken outside. So the total of credit side is rupees 2,39,000. Okay, it seems that values into credit side are more. It must be actually, we'll write the same total over here. Total, right? Same total over here. That is rupees 2,39,000. 2,39,000 is the total, right? Then we have to calculate the total of these items and we have to deduct this total from the total, right? And that we will get the gross profit. So the gross profit is rupees 93,100. Gross profit is rupees 93,100. That is the gross profit carried down. So we have to carry that, bring down that gross profit to the profit and loss account credit side. So by gross profit brought down, it is rupees 93,100. Now let's check, verify whether we have taken all the values to the outer side. Depreciation we have taken outer side, RDD less old RDD taken, advertisement, prepaid advertisement taken, office general expense carried outer. Okay, so what is the total of the credit side? It is 93,100. Okay, so we have to deduct, we have to write the same total over here, right? Same total over here. Then we have to calculate the total of these amounts and we have to deduct that much amount from this amount, 93,100. So we will get the net profit. The net profit transferred to capital accounts, right, of Rucha and Julie. The net profit was, the difference was 72,634. Now how to distribute the profit? What rule they have given? See, in the problem it was given, Rucha and Julie are partners sharing profits and losses in their capital ratio. Okay, means the profit, whatever the profit or loss, profit gain or loss suffered, they will share in their capital ratio. See, Rucha brought the capital of rupees 80,000, right? Rucha brought the capital of rupees 80,000. Okay, and Julie brought the capital of rupees 40,000. Julie brought the capital of rupees 40,000. Then it is very easy to understand the relation between 80,000 and 40,000. See, it is 80,000, Rucha's is rupees 80,000 and Julie's is rupees 40,000. Julie's is rupees 40,000. Okay, now what would be the ratio of profit sharing between them? See, 80,000 is to 40,000, means if we cut 4 zeros, similar 4 zeros, then we will get 8 is to 4. Okay, 8 is to 4. What is meant by 8 is to 4? What is meant by 8 is to 4? 8 is to 4. If we bring them to the lowest value, that is LCM, okay, after doing the LCM, it will be 2 is to 1. Why 2 is to 1? Because 8 is the 2 times of 4. Okay, 8 is the 2 times of 4. So what is the profit sharing ratio between them? It is 2 is to 1. Okay, if you are not able to do like this, if your maths is not good, then how can you simply do it? See, you can find a number from which number you can divide, which is the common number you can divide to 8. It is 4. Okay, so 2 into 4, 2 4s are 18 and 2 2s are 4. Okay, 2 is the common number. Then again 2 2s are 4 and 2 1s are 1. Okay, so what is the LCM? What is the lowest ratio between them? It is 2 is to 1. 8 is to 4 means 2 is to 1. So we have to distribute whatever profit or loss to them in the ratio of 2 is to 1. Okay, now we got the profit of rupees 72,634. Okay, 72,634. 72,634. Okay, now how it should be distributed between Rucha and Julie in the ratio of 2:1? See, very simple. How much of parts should be done of that profit? See, 2 parts and 1 parts. See, there should be 3 parts done. 2 parts for Rucha and 1 part for Julie. 3 parts should be done of that profit. So that profit should be distributed in 3 parts. Out of these 3 parts, 2 parts should be given to Rucha. So what should be done? Simply, we have to give to Rucha in the proportion of 2 upon 3 and to Julie 1 upon 3. Okay, to Julie we have to give in the proportion of 1 upon 3. Okay, so we make the 3 parts of 72,634. How it should be done? We have to distribute 72,634 divided by 3. Okay, so we'll get 24,211. So we'll give 24,211, that is the 1 part to Julie, and it's 2 times. Okay, and it's 2 times to whom? To Rucha. So what is this 2 times? Divided by 3. Then we'll come to 1 part and we will multiply it by 2 to get 2 parts. So we'll give 48,422 rupees to Rucha. Okay, so simple. So let's distribute 48,400, instead of given 70 paisa, we'll give 48,423 rupees to Rucha and 24,211 rupees to Julie. Out of the profit 74,634. Okay. Now this profit should be transferred to the capital accounts of the partners. Okay, because we are maintaining the capital account, separate partners capital account over here. So we transferred its net profit. Okay, so in partners capital account, carried from by profit and loss account, 48,423 rupees to Rucha and 24,211 rupees to Julie. Okay, so the total amount of Rucha is this year is 1,28,423. Out of that, Rucha had done the drawing of rupees 3,000. Right? Rucha's credit side was rupees 1,28,423, but Rucha had done the drawings of rupees 3,000. So the balance amount of capital of Rucha is rupees 1,25,423. Okay, so we'll carry this balance amount, okay, by balance brought down for the next year, right? By balance brought down, this is by balance carried down, closing amount for this year, opening amount for next year, but that is by balance brought down. So what is the total amount of capital of Rucha? It is rupees 1,25,423. Similarly, Julie's capital, we had taken 40,000 over here. The share of Julie's profit transferred from profit and loss is rupees 24,211. So the total credit side of Julie is rupees 64,211. But Julie had done the drawing, withdrawn of rupees 2,000 rupees goods. Okay, so Julie's part of capital, remaining capital is rupees 62,211. Okay, so this 62,211 closing balance capital of Julie will brought down to next year, that is 62,211, and these amounts will carry to the partners capital account in the balance sheet, same amount. Okay, So the Rucha's amount, this is balance sheet, right? Okay. Balance sheet will carry the same amount, capital, partner's capital. Okay. Rucha 1,25,423. Julie 62,211. Okay. See, these are the headings or categories under which we have to write the items of the specific respective category. So capital was there. We didn't have general reserve. We didn't have long-term liabilities. Okay, we had some current liabilities, and let's check whether we have taken all these things to the outer side. Outstanding wages we have taken. Sundry creditors after doing adding the unrecorded sales we have taken. Bills payable we have taken. Similarly, assets, fixed assets, investment, current asset, and okay, fixed asset we have taken motor van deducted depreciation, plant and machinery deducted depreciation, out final value have taken to the outer column. We didn't have any investments. Current assets, sundry debtors after doing adding unrecorded sales and providing RDD, deducting the value of RDD, we have taken the final value of sundry debtors to the outer side. Closing stock we have taken, prepaid advertisement we have taken, and freehold property we have taken. So the total of the asset side of balance sheet is rupees 2,28,434, and the total of the liability side of the balance sheet is rupees same 2,28,434. Very good. After solving the problem, see, we have to verify. Our gross profit was rupees 93,100, and here this is as shown given by the book. The gross profit, their gross profit and our gross profit is matching. It is rupees 93,100, right? It means our gross profit is matching. Next, our net profit was rupees 72,634, and here in the book it is same 72,634, right? And we had distributed it to Rucha and Julie, right, as the same amount 48,423, 24,211. So this is matching. Now let's verify whether balance sheet is also matching. For that we'll check whether the partner's capital is also matching, right? Our balance care brought down was 1,25,423 for Rucha and 62,211 for Julie. Similar, same. And for capital balance sheet, our total Rucha's capital was 1,25,423. Julie's capital was 62,211. Same. The total capital of both of them was 1,87,634. Same as of us. And the balance sheet total was rupees 2,28,434. It means our balance sheet is tally. Very good. Now let's move to the illustration number 4. See, from the following trial balance of Mr. Piyush and Mr. Arun, you are required to prepare trading and profit and loss account and balance sheet as on that day. I'll wait 2 minutes for you to make a column for noting down over here, right? Against example number, illustration number 4, draw one ruling, draw one column against this, right? So I will tell you. Draw one proper ruling over here, so I will tell you how the adjustments will go. Will be recorded. I am waiting for you for 2 minutes. One more addition you have to do over here. By mistake, they have typed salaries word against the word purchases. So make us strike it out. Okay, rub it out because salaries are given here separately. So strike out the salaries word. Okay. Now, as we are moving a little bit faster, okay, as we are moving ahead to the new problems, you have to do the marking by your own. I will just tell you the marking for the adjustments. See, stock on hand on 31st March 2019 was cost rupees 40,000 and market price was rupees 35,000. See, this is opposite to the earlier example. Here, market price is lower, but we don't have to deal with whatever price. We have to just deal with whichever is the lowest price, and the lowest price is rupees 35,000. So we have to remember rupees 35,000 only. We have to take into consideration rupees 35,000 because it's the lowest price according to the principle of conservatism. Okay, we don't have to look up the 40,000. So for closing stock, we don't have to make a mark over here, right? Anywhere in the trial balance. Next, interest on fixed deposit rupees 1,200 is still receivable. Okay, so we have to make the mark against interest receivable. So one effect will be recorded to the partner's profit and loss account credit side. Okay, and the second would be recorded for fixed deposits asset. So where are the fixed deposit? Right. For the fixed deposit, we will make one mark. Right. Next, provide RDD at 2.5% on sundry debtors. See, this is the new RDD. So profit and loss account debit side formula, right? So we will mark against bad debts. But see, bad debts are not there in this trial balance, right? See, yes, sorry, bad debts are there in this trial balance. So we'll make one mark in the against bad debts. Then that much of amount we will deduct from debtors. So we will make one mark against debtors for the new RDD. Furniture depreciation, profit and loss account debit side, and we'll deduct that much of amount from furniture at asset side. So we'll make one mark against furniture. Okay, two marks against furniture, right? One for depreciation, marking in profit and loss account, and one for deducting that much of amount from asset side. Goods of rupees 8,000 destroyed by see. This is an important adjustment. A little bit variation of this will be seen in the latter example. In the unsolved problem, that is practical problem, we will see a little bit variation of this in practical problem number 1. But see, here it is different. Goods of rupees 8,000 destroyed by fire. Okay, goods cost. An insurance company admitted a claim of rupees 6,000 only. What does this mean? We were having the goods of rupees 8,000 which were destroyed by fire. But as we had taken the insurance policy for the goods, for the stock, the insurance company accepted our claim. Okay, and they were ready to pay us rupees 6,000. Okay, our goods were of rupees 8,000. So we lost, our net loss is rupees 2,000. Our net loss is rupees 2,000. Okay, because we got 6,000 against the loss of 8,000. So our loss is rupees 2,000. So where these three values will be recorded, listen properly. Goods were destroyed, so that much of goods we should record at the trading account credit side. Very simple. Goods which we lost, okay, that much of amount of goods must be recorded to the trading account credit side. So first effect will come to the trading account credit side of rupees 8,000. Next, how much of loss did we suffer? See, we suffered the loss of rupees 2,000. So 2,000 is our net loss, right? So we have to record the loss of rupees 2,000 to the profit and loss account debit side. Okay, and we got 6,000 rupees against our claim. Okay, so 6,000 we can record it to the current asset in the asset side of balance sheet, right? Because we got 6,000 rupees. Okay, our claim has been admitted against the loss of rupees 8,000. So that is an asset for us. So we can record the rupees 6,000 which we will get at the current asset side. Okay. Now see, opening stock was recorded 30,800. Purchases were recorded 80,000. Wages is rupees 7,500. Carriage rupees 3,000. Carriage inward. That was carriage inward. Okay. Then royalties rupees 2,500. Freight rupees 700. Okay. Sales rupees 1,20,000. Good disturbed of fire rupees 8,000 and closing stock rupees 35,000. So if we look at the figures, these figures, the figures of the credit side are, the values at the credit side are more. So the total of the values of the credit side is rupees 1,63,000. So we have to write the same total at the debit side also. That is 1,63,000. So we have to deduct the total of these amounts sorry, from rupees 1,63,000. So we'll get the gross profit, that is 38,500. We have to carry this brought down, whatever gross profit has been carried down, we have to brought down to the profit and loss account credit side. That is rupees 38,500. Then discount given, salaries, expenses, printing and stationery rupees 1,500. The old bad debts which we are given in the balance, in the trial balance rupees 500. New RDD which we'll see how to calculate. Okay. Loss by fire. See, 2,000 was our total actual loss. So we have to record it to the profit and loss account debit side. That is loss by fire. Depreciation on furniture rupees 1,010. Traveling expenses rupees 3,450. Advertisement expenses were 30,000. Less prepaid advertisement. Why? Because the advertisement expenses were given for 2 years, right? 3 years. So we have to deduct that much of amount, right? So actual advertisement expenses for this year are rupees 10,000. So this will become an asset. Then at the credit side, interest on fixed deposit rupees 1,000 plus interest receivable. So it will become 2,000 to 1,200. So total will become 2,200. And the total of the credit side is rupees 40,700. Okay. So we have to write the same total over here, that is rupees 40,700, and we have to deduct the value of this much of things, this much of items from here. So the total difference will be rupees 14,850. Okay. So we have to distribute this net profit. This is called as the net profit. So we have to transfer it to the capital account. Okay. So and we have to distribute to the Piyush and Arun in the ratio of 1:1, same ratio. So we'll give, it will be 7,407 rupees 50 paisa actually, but it is difficult to distribute 50 paisa. So we'll give 1 rupee to Piyush and 1 less rupee to, 1 extra rupee to Piyush and 1 less rupee to Arun. That is 7,408 and 7,407 rupees respectively. This is the balance sheet of Piyush and Arun. Leasehold property 25,000, investment 15,000, fixed deposit 15,000 plus interest receivable 1,200. Total will be 16,200. Furniture less depreciation, sundry debtors. See, this amount 1,075 was recorded to the trading profit and loss account debit side, right? This was added. See, insurance claim, by mistake they have printed 600. Strike out the value in the book 600 and write 6,000. Okay, because claim of rupees 6,000 was accepted by insurance company. Prepaid advertisement 20,000 of 2 years. Cash in hand, cash at bank and closing stock. The total is rupees 2,05,315. Similarly, capital accounts, Pish capital was rupees 80,000, same Arun's capital was rupees 80,000. The net profit was added to them. They don't have the drawings. So the total is rupees 87,408 and 87,407. Sundry creditors rupees 20,500 and bank overdraft rupees 10,000. So the total is same, 2,535, 2,535. Let's move to the quiz of the day. Quiz of day 12. If goods are burnt in fire, now see, if goods are burnt in fire, an insurance claim is allowed for 30%. Okay, 30% against the value of the goods, of the cost of the goods. Then 70% cost is recorded at where the 70% cost is recorded, 30% claim is allowed, accepted by the insurance company. Then 70% of the cost is recorded where? Whether it will be recorded to the debited to the profit and loss account, debited to trading account, credited to trading account, or will it be recorded at the current assets in balance sheet? You have to give the correct answer immediately. What we will learn in our next lecture? Partnership final accounts, illustration number 5, which is given on page number 34 to 37. That is of Rama and Krishna. Okay, Rama and Krishna, and along with the adjustments. One more thing we are going to learn in our next lecture. That is the most important thing. That is practical problem. We are going to solve the practical problem number 1. See, slowly, step by step, we are moving towards the practical problems. The solutions of these problems is not given in the book. The practical problem number 1, which is of Amit Bhai and Narendra Bhai. So what do I expect from you? That you should read the problem number 5 as well as practical problem number 1. You have to make the ruling that you have to draw the columns for solving both the problems, right? You have to calculate how many lines should be left for trading account, how many lines should be left for profit and loss account, how much space should be left for balance sheet or for partners capital account by looking at the number of entries in debit side and credit side, right? Given in the trial balance, and also you have to look at the adjustments, right? After looking at the adjustment, you have to think how much of line should be left. Thank you. Stay home, stay safe.